Okay, so we are going to backtest Fibonacci, fractal Fibonacci, and fractal and overflow with the trend. So this is more like a video journaling type style, mainly for me. Obviously, if you're watching it, it's because it's on YouTube. But again, it's just I'm just gonna show my process of how I learn. Everything I learn is by observing a lot, recognizing patterns, and going over different variations of the same thing and understanding the logics behind those patterns and how to approach it, right? So this journey is about learning and improving constantly, and I enjoy doing this work, especially when I understand something from a different perspective or deeper, because I always knew about Fibonacci, but this is a new angle for me. The dynamic understanding of Fibonacci came to me, but now it's gonna be deeper. So we're gonna begin with we can take any level really, but again, everything is connected, right? Every high, every low is connected to one key level, at least the 50 level. So I use 3 levels of the Fibonacci. I use those 3 levels for me is enough. And then, yeah, that's it. So I can start anywhere on the chart, really, anywhere that has a lower high or a higher low. It's the same. So I'm just going to begin in this area here, and then we'll make the connection later. So we're going to start with a fractal perspective, because we're on a daily time frame, right? So from a daily time frame perspective, we need to understand, okay, the market is moving exactly like the 1 minute. So even though it's on a daily time frame, but for me, it's like I'm looking at the 1 minute time frame. But obviously this is going to take longer to play out, and this is where you're going to get the best opportunity to take them long term and short term, right? So daily time frame is perfect for this, but everything that we are about to witness here, we can also see it play out on the lower time frame. So that's why it's important to actually find those key levels on the higher time frame first, so then we can actually execute them here on the lower time frame. Okay, so let's go at more recent prices. Actually, that'll probably be easier and better in general. So let's look at this low right here, right? We can clearly see that that's a higher low. Okay, so from a Fibonacci perspective, when the market is going down, obviously, right, we will, before this move is going up, we will always already have an idea that, okay, if this is the highest high at that time, right, then from a fractal perspective, that means here, this is where we're going to get the first reversal. And that reversal is going to allow us to enter in this key area. So here we have this high connected here. We are looking for a lower high. So we start to draw the Fibonacci from this high. And then we are going to go with this low right here. Why am I choosing this low and not this low? Because this low returns back to this same high, and the market doesn't really go anywhere. Well, I guess, well, this low is the lowest low, sorry. So here, obviously, so we are still in this area. So we have to actually wait for them to break below this level to actually start the process. Okay, now they break below. The idea now to get, so that we can get an entry here, we have to adjust our fib level. And again, the fractal perspective is going to be this lower high right here. Okay, because this happened in multiple. So if you look at this, okay, the market goes lower and then it goes back here, same height, but it's slightly lower. So I'll have to adjust this, and then the price is going from here now to back here. So now the 0 level definitely has to come here. Then we're going to get our first sell opportunity here. The market extends below the 0 level. Now we are in this position here. Swing or short term, right, if it's the lower time frame, and then we want to get the lower high, the lower high, which is going to be here. So how do we get this level? We are going to take the 100 level and place it on top of the last high that was rejected within our key levels. So between the 50 and the 78, this is the highest high that was rejected that initiated the move to the downside. So now we need to drag this here and adjust our zero level to the lowest low before the market pushes higher here. So it's gonna be this area here, I guess, and then we're gonna know if yeah, so basically this candle here, that's a bullish candle. Then this candle opens, it goes high, and then it closes, and then goes low, and then closes bearish. So from here we already have another entry here. Perfect. That becomes our new 100 level. And again, the process starts all over, and then we are extending here. The market fails to touch the 50%, so now we have to keep extending, and we extend to here. The market comes perfectly, creates a beautiful lower high, so that becomes our new 100 level. And from this scenario here, we can see the market gives us a return right here, and then we have a fractal entry here as well, and then that becomes our new lower high. Okay, the market goes deep, very deep, then it comes back again to this area, right? And then we get a nice sell, and then we can see the market fails to go lower. So now we have to look for buy entries in the opposite direction. So in this scenario, all we gotta do, right, we just have to take the opposite, which is this low, to this high right here. So the 100 level now starts at the bottom. The price is here. We wait for the pullback here. Obviously, this is where we get out, because we can see, well, probably getting out here because this is a tweezer pattern, and it's a probability that the market is going to go higher. Plus, we had a fractal break of structure here with this candle, and it's also a W pattern with the second leg higher. So it's probability that's going to go higher. So we're going to get out here into the sell trade, and then automatically then I'll have to adjust here because I have no buy entry as of now, and then I will need to just extend like so, and then now I just have to wait for the market to pull back to 50 to get my next higher low, and that's it. We'll see how it plays out. And obviously, if they keep going higher, we just keep extending, right, until they can return to the 50, and then that will be our higher low. If they do not extend higher, we let it play out, because we want to see the price comes at least to 50% to give us a bounce. And like I said, if they fail to do this, because maybe they go a little bit higher, then all we have to do is extend the Fibonacci. If they go higher, then we extend the Fibonacci, right? Because they can go higher. They can go higher. And then once the price is here, look, oh, it's potentially gonna be an upside down head and shoulder, right? Let's see how this plays out. Thanks for watching, guys. And plus, we have a buildup of liquidity here also. All these areas are liquidity. All these highs, liquidity. So we could see a push, return, boom. Let's see. Going to take it day by day anyway. So yeah.